Hello, everyone. Welcome to Legion Capital's annual shareholder meeting. My name is Shane Hackett, and I'm the Chief Strategy Officer at Legion Capital. I'm delighted to see everyone who has joined us today. Your presence is a testament to your commitment to our company, and for that, we are deeply grateful. Before we dive into today's agenda, I'd like to officially call our meeting to order and recognize that we have a quorum of shareholders present, and our 2024 annual shareholders meeting is official. And we can now begin. I want to share a brief overview of our company for those of you who may be a little newer to Legion Capital. Legion was founded as a private equity firm focused on specialized lending to small and medium-sized companies and real estate developers. And Legion provides bridge funding, acquisition finance, development and growth capital in a highly customized and expeditious manner, addressing a large and growing segment of small business lending that is underserved by most banks and institutions. And over the years, we've grown to become more real estate centric, working with Florida-based real estate developers on acquisition, early stage development, and growth capital. The needs and developers addressing a market segment that truly has gone largely underserved, especially in this current lending and interest rate environment, and almost non-existent by banks and conventional lenders. The core holdings and assets remain in collateralized real estate development, construction, infrastructure, materials, and other business sections, along with a substantial pipeline of future potential transactions that can provide us with an opportunity for growth over the next several years. Historically, our annual shareholders meeting has been focused on operating performance and review of the prior year's audited results, and our plan is to follow that tradition as we'll discuss and reflect upon a remarkable year that we had in 2023. It was a year of unprecedented growth and achievement for Legion, and it marked our third straight year of operating profit and a record performance in both revenue and profit. We'd like to take this time to thank our entire team at Legion for their hard work, their dedication, and the innovation that fostered and created the operating results for 2023. Today, we have an exciting lineup of speakers who will provide insights into our operating and financial performance for the prior year. And it's my pleasure to introduce the key speakers who will be presenting today. First, our Chief Financial Officer, David Null, will present and discuss the 2023 audited financial statements, highlighting the operating performance and financial year comparisons. Second, President and CEO Paul Carrazone will share an overview of how Legion operates and the key drivers behind our company as a specialized real estate lender. Finally, our Vice President of Corporate Finance, Jason Plesniak, will discuss current market conditions and their impact on our corporate finance strategy from an operating and market challenges perspective. We have much to cover, and we are excited to share our report and insights with you. Without further ado, let's begin. Please join me in welcoming our Chief Financial Officer, David Null.
Thank you, Shane. Just want to discuss the audit for 2023 and our financial results for comparison to 2022. And to start out, I just want to say that the company ended 2023 with $3.1 million in cash, a decrease of $5.2 million from the prior year ending cash balance of $8.3 million. The decrease in cash was attributed to the growth in the lending portfolio. The lending portfolio increased by $4.7 million to a record $51.7 million. The company ended with adequate cash reserves for near-term operating activities. The liquidity to grow the lending portfolio by $4.7 million was provided by $1.8 million positive cash flow from operations and cash on hand. The company used $6.9 million for investing purposes, mainly to grow the loan portfolio by $4.7 million. The company did not generate cash flow from investing as the maturity cycle for portions of the bond portfolio matured from long-term liabilities to current liabilities becoming payable within 12 months. Proceeds from notes payable decreased by $10 million, resulting in stagnant growth as cash generated was utilized to pay down maturing debt. The company will need to continue to raise cash in 2024 to service bonds that will be maturing within the next 12 months. The company grew revenue by 29% in 2023, recording record operating revenue of $8.9 million, delivering record income of nearly $3.7 million, a 242% increase over 2022's previous record income. As the loan portfolio has grown to roughly $52 million, the company felt it prudent to allocate $976,000 of the record revenue to a provision for loan losses against any future potential losses. The provision contributed to higher than expected operating expenses of $3.3 million. Without the provision for operating expenses, the operating expenses would have fallen in line with expectations and the company would have generated over $4.7 million in earnings. The company does not anticipate any loan losses from the growth of the loan portfolio, but has elected to make this allocation based upon historical losses as required by the new Financial Accounting Standards Board, referred to as FASB, CECL methodology placed into effect in 2023. The company was able to return $1.64 million in dividends, nearly 7% return to our preferred shareholders in 2023. Generally accepted accounting principles, normally referred to as GAAP standards, requires preferred dividends to be offset against net income. After the application of preferred dividends against net income, common shareholders experienced a net income of $2.1 million or 13 cents per common share in 2023. This was the first time in company's history we were able to record a common share positive income to our shareholders. And with that, Shane, I'll turn it back to you.
Thank you very much, David. And now please welcome our President and CEO, Paul Carasone.
Hello, everyone. It's my pleasure to get this opportunity to talk to everyone about our operations and performance, and more importantly, the sort of big picture ideas as to who we are, what we do, and what differentiates us as a company. I think one of the ideas I think I'd like to convey is what makes us unique as a business out there in the marketplace. And one of the things I think that stands out, and it's important to understand when we label ourselves as a specialized lender, is that unlike a typical lender or bank or other people in this space, we conduct our day-to-day operations with our deals with no specific formula in mind. And I'll get into what that means in a minute. But we do have a standard methodology. So with that idea in mind, you step back and you look at where does our loan portfolio come from? Who are the clients or businesses in that portfolio? And what makes those deals beneficial to both us in terms of our investors and shareholders, and actually more importantly to our clients, our borrowers who are taking our capital and investing it into the marketplace and earning substantial returns for themselves. When we look at a transaction, three things stand out. Obviously, the people involved, the specific project involved, and an important component of all that is the potential of that project. And what do we mean by those things? We get opportunities in literally daily for places that have a need for capital and are approaching Legion looking for our funds to help them grow their business. We look for people that are unique, experienced, smart, that interact well with us in terms of the way they communicate, and that they're able to establish quickly with us that the project that they need our funds for is something that our capital can immediately make a difference for. And as we ratchet into these deals and we look at these opportunities and we maintain our loan portfolio, we're always looking at what is the potential of that project, because at the end of the day, we need to generate high yields out of those projects and to make sure that our client is making plenty of money on the bottom line, because if our clients make money, then we make money and we generate a nice return and asset base for our shareholders. So let's talk a little bit more about how we look at these deals. Fundamentally, we're an asset-based lender, but we're different. We're different in that we do a high-touch high interaction with our clients. There are typical deals that we actually are working on daily, and all deals we are reviewing weekly. As I mentioned in the opening statement, there's no specific formula in terms of what we do, because our transactions are customized to the specific opportunity on the table and the sophisticated decisions we've made to put our capital at risk with these various opportunities. One thing you always hear in business or in analytics is follow the money, follow the money. And underneath all that, we sort of do that with our underwriting analysis. If we put money into a transaction, not only do we follow that project on a daily basis, but the fundamental requirement is to pay attention to that project and what the current market value of those assets are, because that is what protects the investments we've made into these businesses. So even though there's no formula, there is a methodology, and that methodology is built up of a few things. One is the way we structure our deals. And again, it's one of the things that make us unique. We tend to do our transactions on a short-term basis. And why would we do that? Are we crazy? No. But hey, industry standards with lenders, they want long-term relationships. When their loan portfolios are analyzed by the OCC, Office of the Controller of Currency, and get reviewed, they like to see a portfolio of loans that have average maturities, 5, 10, 15 years out there. We're completely opposite of that. We like our maturities on average to be a year or even less in terms of our portfolio. And why do we do that? We do that, one, because we can, and two, because it's smart. And let me tell you why that's smart. When you put money out the door in any given economic environment, there are global issues that affect the risks of that money that's going out the door. Things like interest rates, things like the world economy, things that you can't predict like COVID. These are things that can affect the underlying business transactions that we do. And the longer you write your documentation to support those transactions, the greater the risk becomes. So as we underwrite our deals on a one-year basis or typically annual basis, we've mitigated that long-term risk that other people have built into their portfolios. It also allows us to be more detailed and aggressive in writing the covenants and performance requirements that we want to see on these specific projects that are making a huge opportunity and difference for our clients. Things like, dependable labor, the cost of materials, the market demand for whatever that real estate project that you're doing is. By underwriting these things on a short-term basis, we do, I think, an excellent job of mitigating the risk to make sure that the money that we've put out into the marketplace is managed in a way that no matter what happens with the economy, up, down, left, or right, we're paying attention to that asset to do two things: make sure our client's going to make money, and two, make absolutely sure that no matter what happens to that business, that the collateral value of those assets protect our investments. So stepping away from that, what makes us good at what we do? What makes us different, again, from the marketplace? And I think I want to talk a little bit about our team and the methodology that we do. Our team of people on average have decades of experience in putting deals together, in underwriting deals, in managing deals, the legal structures, the title work associated with these real estate projects. Our core group of people that I've been blessed to work with now consistently for a number of years have worked together that even though I say there's no formula, there is an absolute methodology to everything that we do on a daily basis. The expertise that our team brings together is second to none. We have broad-based analytics in terms of how we look at a specific project, a specific market, the legal aspects of it, how it's getting documented, the structures that we're able to negotiate in deals. Again, no formula, but a very specific methodology. And it isn't just internal. Even though we have decades of experience among our team, we also on a regular basis rely on our outside relationships. We don't want to get in a groupthink position where, it's just the Legion personnel that have made an absolute decision as to what's going on with the transaction. We want to interact on a daily, weekly, monthly basis with our outside expertise and experts and consultants that we work with regularly. Every one of our deals has third-party appraisals built into it. Every one of our deals, we actually interact with a lot of the other businesses that are doing work on those projects, including interfacing directly with the cities and planning departments, including interacting with engineering firms and consultants. And we even contract out a lot of inspections on these projects. We want to make sure that what we believe is happening is verified by outside sources. And that might be things as simple as the development of entitlements on a raw piece of land, or more complex to make sure that the construction activity on vertical construction matches what our numbers are showing and what the projections had been given to us. So in general, I think that's a good synopsis of what makes us unique. We're a lender, that's not unusual. We're a specialized lender, that's a little bit more unusual. But we're a specialized lender that opportunistically finds these situations where we can make a difference for a client. And as we underwrite these deals strategically on a short-term basis, we're building long-term relationships, which is reflected in our financial performance this past year. So with that, let me get to sort of a review, sort of a recap of, David had dug into our financials in a very deep way. And I think it was very helpful and important to hear those contrasts between our performance last year and the year before. But I just want to highlight a couple of things that really, really stand out in what we've been able to do this past year. One, it isn't a small achievement for our company, our growing company, to hit a revenue number of almost $9 million off of our portfolio of loans. A massive increase in terms of what we've done in the past, and something that supports and proves, the structure of the way we do our deals. I hadn't gone too far into it, but one of the ways we make sure we get to participate in the success of our clientele is not only do we get a fair interest coupon, but we also get fees and success components built into our deals based on the idea that if our client is making money, we get to make some extra money too. And that's built into the terms of our deals, the fundamental contract of how we bill through interest and other components in this bundle of goods and services, as we like to call it. But it was because of the way we write and document our loans is the reason we were able to generate those types of revenues. The other thing that David pointed out, and I don't want to understate this because this was a first time in our history in terms of what we were able to do and show you guys as to how we can perform as a company and what we've been able to build into and get the skills of our team and our deals together. Our company last year, for the first time in its history, generated income that was directly attributable to the shares of our company. And that is something that is a milestone that I think will be another differentiator or how people look at our company and our business and the value of our business. Over $2 million attributed to shareholder, income is an amazing number. And again, a testament to our team and the abilities and the things that we've been able to do in the past year. A couple other things I just want to summarize and sort of that year recap and review idea. Even though our loan portfolio grew modestly, the ability to make money off of that loan portfolio was significantly enhanced. Again, tied to the amount of revenues we were doing. We're still, in contrast to a lot of people out there in the marketplace, a relatively small lender in Central Florida, Orlando-based businesses and those relationships. But we built in a portfolio approaching $60 million, and we see the opportunities to continue those relationships and grow relationships and continue to build that loan portfolio. And we expect as that loan portfolio grows and performs that we will be able to maintain the types of yields and protections that we've been able to demonstrate we've done in the past. Stepping back for a second before I summarize and pass things along, one other thing I want to point out. In all those numbers and all those differentiators and increases and expenses and things you heard about, I mentioned two things: the quality of our team, the experience of our team, the work ethic that our team brings together. Whether it takes 3 days of 18-hour days to get a transaction done, working on weekends, whatever we've ever needed in terms of operating our business, our team has always stepped up to do it. But I'm proud to say, from a business standpoint, the cost of our G&A costs, our general and administrative costs of running our company in 2022 and then again in 2023 really didn't change. And think about that. Most companies, your revenues go up, your expenses go up, and the cost of your team and running your business goes way, way up. Well, we have good people, we pay them well, and we are able to operate our company very efficiently. And what that indicates is that as we continue to grow as a company, the potential for profits continue to increase because we have a capacity within our business that is significant, and we look forward to representing you, working hard in the marketplace, communicating with you on a regular basis, and watch our company grow. So with that, I thank everyone, and I'll turn this back to Shane.
Paul, thanks for that, those insights. That was great to hear directly from you on the overall philosophy and how the company operates and how you underwrite and look at deals and opportunities. That's terrific. At this time, please welcome our Vice President of Finance, Jason Plisnak.
Thanks, Shane. Just a few words from a corporate finance perspective. As we're regularly focusing on capital channels and our continued access to capital. Currently, those channels include our broker-dealer and registered investment advisor, retail investment network, public markets, and private capital, which of course includes potential lines of credit and participations into our current loan assets. With that in mind, we're looking forward to the rest of this year under the guise of both opportunities and challenges, some of which are intertwined. So from an opportunity perspective, currently the higher short-term interest rates in the market, in short, means Legion's loan pricing generally comes in as more competitive, particularly in relation to regional bank lenders who tend to be our primary competitor within our target market clients. That opportunity also leads to more access to higher quality deals generally. With bank lenders underwriting tightening up the past 12 months and costs of those loans certainly increasing, the real estate developers who generally only use bank financing are certainly considering specialty lenders like Legion Capital more often. And that's what allows us and has allowed us over the past 6, 9, 12 months to have access to higher quality deal flow. Another opportunity that we see and we lean on every day is really Legion's market position and reputation in the regional area of Central Florida and Greater Florida. We've been working for many years to position ourselves as a nimble, accommodating specialty lender for real estate development projects, and frankly, with limited competitors, as we've seen over the past number of years. So, those are some of the opportunities that we see with our business. From a challenges perspective, and these are things we deal with every day and every year, higher interest rates means it's generally more difficult to raise capital because the elevated risk-free rates leads to investors demanding higher returns. And that's both in the retail BD RIA channel and institutional capital markets, both public and private. Additionally, as a small company at Legion, we tend to keep our available capital at work. That is, of course, in real estate development loans to continually earn interest and fees, which drive the company revenue. So sitting on excess cash at Legion is not ideal at our size, as it really introduces component of negative drag on our net yields, which is the spread between our average internal rate of return and our weighted average cost of capital. The spread between those two metrics, of course, is how we make money at Legion. So all that said, the firm's biggest current challenge as we see it is short-term cash liquidity to both service short-term financing obligations while simultaneously working to grow our loan portfolio balance and continue to grow the company at large. So that challenge is ever present at our firm as we strive to grow. So it's a challenge we know, and one that this management and ownership team is experienced at dealing with and solving, quite frankly. So thankfully, in that regard, we look back to what we've done, and our prudent loan portfolio construction over the past number of years is really allowing us the opportunity to manage these short-term liquidity needs going forward. And what I mean by that is, the strategic underwriting guidelines and intentional over-collateralization that we've demanded and achieved within our loan portfolio puts us in a position to have that excess collateral and offer participation into some of our loan assets, thereby creating liquidity when needed. So that's just one, strategy and potential outlook that we have to address challenges going forward. So in summary, we have both these opportunities and challenges ahead of us. To build on Paul's prior comments, the experience, skill, and drive of our people is really what gives us confidence to address these challenges and take advantage of these opportunities and continue growing the company here at Legion. So those are our general thoughts from a corporate finance perspective, and I'll hand it back to you, Shane.
Thank you, Jason. And I also want to thank all of you, David, Paul, and Jason, for your insightful presentations today. As we come to the end of our annual shareholder meeting, first and foremost, I want to express gratitude to the three of you who we all work together with our teams. And I'm also grateful for the continued support and confidence of everyone in Legion Capital. And it's your trust and investment in our company is what drives us collectively to achieve new heights. We've heard today about our record-breaking performance in 2023. It was a great year. And we've also discussed some of our future opportunities as we try to grow our loan portfolio, as that is our asset base, and the market conditions and challenges in which we operate. It's true that we can't control overall market conditions. It provides some opportunities, it finds challenges. We don't control interest rates. But the one thing is we remain steadfast in our commitment to providing the best lending experience possible for our clients. And our team will continue to work diligently to navigate the challenges and seize the opportunities as they arise. We believe that over time, our company will continue to perform and deliver value to our clients. And then ultimately, if we deliver to our clients, we deliver to our shareholders. And we are shareholders ourselves. Our success is a collective effort, and we're incredibly proud of what we've accomplished together over the years. Starting something and getting into this business, any type of business that you start, is always a large lift, and 2023, as we look back, was the culmination of that large lift in hitting our record profits. And as we move forward, we'll work to adapt and to innovate and grow Legion Capital, and as we want to remain a leader in specialized lending. Thank you once again for joining us today and for your unwavering support. We appreciate that very much. We look forward to seeing you again at next year's annual shareholder meeting. Be safe and healthy. We look forward to seeing you next year. And this will be the conclusion of our annual shareholder meeting. Thank you and have a great day.